Let's give this a couple minutes for some people to hop in because it's going to help me. If I've got people to ask questions, then I'm going to know whether or not I did a good job of explaining anything. Let's see, what am I missing? Stream deck. Let's get the stream deck going. Are we going to work stream deck? Oh, cool. Thanks for joining me, stream deck. Boom, 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 boom. Boom, boom, boom. I'm going to throw this out in honor chat so we can get maybe a little bit more participation. It's going to be the first part of this video is going to be so boring. It's going to be, I'm not one for high production value content. Okay, we got 8 people in here, so we're going to get going. We're going to just want to talk about supply and demand. It was a video request that was I don't know, some people requested it. Alex asked me if I could make one, so I've been putting it off for a couple of weeks. Here we are. Let's talk about supply and demand. First thing I'm going to do is I just want to talk about simple concepts, really, really, really simple concepts, right? This has nothing to do with any specific asset. It's just basic baseline concepts, right? So say price is at this level. Doesn't matter what the level is. It makes no difference. We're just saying that price is here, right? That's all I'm trying to say. So in the event that, let's say I buy 5 of these things here, and somebody else sells at the same point in time 5 of these things, whatever these things are, tomatoes, bitcoins, shares of a stock, doesn't matter what they are. Hey, Ando Pancho, happy Sunday, man. Okay, so if I buy, did I do this right? Oh, I think, hold on. Let me redo this. If I buy 5 of these and you sell 5 of them at the exact same time, what happens to the price? Anybody that, well, that's the only unfortunate thing is we're going to have a little bit of a delay on YouTube, but I want to see if I can get some people to play along with me here. So if anybody wants to throw into the chat what's going to happen to the price, it's super obvious. Somebody throw me a bone. I promise we'll get into the juicier stuff later. All right, I'm gonna because there is either a lack of desire to answer the question, or B, there's just a lag on YouTube, right, between me saying it and it finally making it to you guys. What happens to the price is nothing. Nothing at all will happen to the price, okay? 0 things are going to happen. If these 5 orders come in as a buy at the same time that these 5 orders come in as a sell, the price goes nowhere. Yeah, same or balances out. Thank you, Anthony. I'll probably not wait for answers going forward just because of the delay on YouTube. But if you guys have questions, please, any point in time, ask a question, right? Now, if you sell 5 of these first, and I buy 5 of them later, right? Like, so these are the only 5 orders that have come in on the asset, and they're sell orders, and my buy orders did not come in at the same exact time, then price is going to go from it's going to go from a equal, like a price is flat, the 5 sells come in, the 5 buys get hit, and now we are back to flat line, right? So if the five sells came in first, price moves down. If the 5 buys come in second and it's equal to the 5 sells, price returns to the point that it came from. Pretty simple to wrap our heads around, right? And so the simple concept of and by the way, guys, I am not working off of notes right now. I am going straight off the dome with this, okay? I'm going straight off the dome, so I apologize if it ends up being a wreck. Again, I'm not into high production value, so we're just going right from the dome here. Okay, so the entire the reason that price moves, then, right? Price is flat. The reason that price moves in any given direction is all an effect of the supply versus the demand, right? So in a scenario like this, and we'll see if we can. In order for it to change from its current price, in order for it to go down, supply has to be in excess of demand. There's just no other way for price to go down. There has to be more cells up here. Let me give me my damn highlighter back. There has to be more cells up here than there are buys for price to go down. Simple idea, right? So let's get some more of this stuff off of here. So let's say that whatever, we'll do this again. We'll say 5 sell orders come in here, and there are no buy orders until down here, but there's only 3 buy orders down there. So price is going to dip down until it hits these 3 buy orders, right? Now, it hit 3 buy orders, but there are 5 sell orders. And again, I'm just using random numbers. Also not a mathematician, right? I'll forewarn you there, not a mathematician. So you are going to see mistakes in math today, guaranteed, right? So price hits the 3 buy orders, so it starts to come back up some. But is it going to come up above this high that was put in? Well, no, because supply is greater than demand, right? So it's going to come up about 3/5 of the way through this range before it stops. So simple function of buy and sell. Now let's say that something more obnoxious came in up here. Let's say that I'm not even going to count them because, again, I'm not good at math anyway, so it doesn't matter to me. Let's say an obnoxious amount of supply came in here, and there is, a few buy orders down here. There's a few more buy orders down here. There's a few more buy orders down there. There's a couple more buy orders down here. Then you're going to see price is going to dip down. All this supply enters the market. Price is going to dip down, hit these buys. It's going to come up a bit. Now, if no other fresh positions enter the market, price will remain right here. But this was actually, I don't think this is exactly the way I wanted to explain it. Let's go ahead and count these up. Let's go ahead and count these. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18 cells. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. So there's 13 in our theoretical example here. There are 13 buy orders below us, and I think we said there are 18 sell orders that have entered the market right here. So in the event of this, price is going to fall below this low because the total supply in the market exceeds the total demand in the market. So it's going to shave through all these, and you might see a little boop, 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 and then it's going to fall down even further because there is I forgot the number already, but it was not greater than the total amount of supply that hit the market here, right? So price is going to fall, fill longs, fill longs, fill longs, fill longs. Now, when things start to sort of really waterfall on you, what you may find is that it comes down here and it slices through these because there's a lot of supply in here, right? There's a lot of supply. So it may slice right through these orders. Depending upon where they had placed their stops, these are buy orders. So in the event that it slices through them and hits all the way into their stop loss, these buy orders now become further sell orders. They become further supply because when a stop loss gets hit on a buy order, that is a sell. So it can cascade down through these depending upon the amount of supply that entered the market, especially if it can drag these orders into their SLs, which creates more selling pressure. Now we already have more supply up here than we ever had demand in this area. So as it creates more, as those SLs get hit, creates more selling orders, then it flies down to these next positions, again, pushing through their SLs because all of this supply was going to push price down to here anyway. So depending upon where all these SLs are, it may end up ripping through all those, creating more buy or more sell pressure, more sell pressure, more sell pressure, more sell pressure, right? So all of that makes perfect sense. I'm hoping if it doesn't make sense, I sure hope that somebody is going to ask a question so that I can make it make sense. Now, I think we had like 18 up here, and I'm going to say we had 15 in here, right? 18 sells versus our 15 buys. Now, if down here there exists, say, another 20 buys, and we had our 18 sells that brought us to our 20 buys, well, then price is going to return all the way back up to there, right? So I just wanted to, I don't know, in my head, this makes all the sense in the world, right? But I wanted to just simply try and kind of illustrate like a baseline concept of how the market is going to flow through supply or demand. Now we'll get to talking about how to identify supply and demand on the chart. I'm going to, while I do that, I'm going to read, I'm going to go catch up on the chat and see if anybody's got any questions. That's a good question, Black and Blue. And maybe by the end of this, I'll have an answer for it. But that's a maybe. That's a maybe. I don't know if we'll work through that concept you have there and see if we can't get a resolution for it. Because I just don't know if I've really tried to look at it through that lens before, but it should be possible to do so. Now we're just going to draw out some fake market structure, and yes, we will get into live price action, and we will show, kind of illustrate these concepts on candles themselves. So I have essentially, there's a couple different kinds of supply and demand I want to talk about. First one, we're going to say that price comes down, it sets a low, sets a high, comes down again, has a slight retracement, and then creams your low. Just absolutely smashes your low right here. So in this example here, this entire area is always going to represent my supply range. Okay. Now, when I look at a supply range in this specific example here, I think to myself, what caused it to break this low? Where did the positions enter that caused it to break the low, right? If this is all the evidence I have to go off of, I'm trying to determine where did the supply enter the market that caused this this break in structure of the low right here. Now, for me, I know that like as this pulled price is already here, right? So we know as this pulled up and pulled up and pulled up that it was filling short orders, and those short orders, all the sum total of all those short orders were in excess of any demand that entered the market here. We know that because price is already down here by this point. So I know that, you know, there's likely been from here all the way up to here, there is already evidence, because we are down here, that shorts filled all the way throughout this area. But for me, the point on the chart in which the actual supply entered that created the break in structure is always going to be the last buy to sell that breaks structure from left to right. And this needs to be an inefficiency, right? This needs to be a fair value gap as you slam below the low. This is always going to represent to me, like this is what I refer to when I talk about like trying to find like that institutional footprint. Where did they hit the market, right? And this is where, so then this entire zone from this high to that prior low, let me make this just a box, is going to represent a short zone for me. That is always going to represent a short zone between this point down here at the bottom and this point up here at the top of this guy. This is always going to represent my short zone. And this is where that concept of range, initiation, mitigation, continuation comes in. Now, why in the hell does it come back for a mitigation? Why does it do that? This isn't something I read in a book somewhere. Okay, so just bear with me here. Okay, this is just me sitting and thinking for years, right? For years. I don't know about you guys, but for me, I have entered short and only seen part of my position fill. Right? In other words, I have a limit order and it comes up and it hits my limit order, price runs away and I get a partial fill there. I don't know if it's ever happened to you, but it's definitely happened to me. And when you have a portfolio and you're trading multi-million dollar positions, and you have all of those orders stacked in one place, right? So let's say we've got let's say we have a bit of a trend, a downwards trend here, right? So Mr. Market Maker sees or is forcing price to go lower. They see it come up here back into, you know, like they see it retrace up, start flying down. They place their limit orders here. Market is attracted to the liquidity, hits it and comes down. But their order was so big that it caused slippage in the market. That same example of when we had, whatever, our 18 sells and our somewhat, 15 buys down here. And when these enter, it rips and slips through all that stuff, right? So all of this position, some of this position may be remaining up here that has not been filled. There just generally may be unfilled short orders here. Could have been from the original institutional position that opened there, causing price to fall. It could be from other people adding orders to here saying, hey, obviously somebody with some power in their portfolio moved the asset from this place to this place. So if it were to retest that, they may have positions to fill. I may want to get in and try and fill with them. And generally speaking, what are you going to do anyway? You're going to short here? Well, that doesn't make a whole lot of sense, right? Because you have a fair value gap. This is pretty much always going to be a fair value gap here that I'm referring to. So that can cause price to retrace up. The general thought I also have here. So we've got the concept of unfilled orders up here. Price ran away from them, left them sitting unfilled. Market's attracted to liquidity. Another reason, and this is just my head, guys, this is just my head. As we came up and slammed down, we cleared out all orders that were in here. We cleared out the order book, right? This flushes the order book up to this point, right? Anytime price falls from here to here, it's going to flush whatever was in the order books there. So we're now sitting in a place on the chart where we have filled all of these orders. Whatever orders were in here, they have all been tagged, right? So that may have been enough. So let's say, I don't know, let's say there was 20 short up in here. Again, not a mathematician. And the sum total of long orders in this area was 18. So it was 18. Well, as it has sliced all the way through here and filled those 18 orders, there's nothing left on the books. Price is going to come up some amount because it has filled orders of demand. It's going to come up some amount, but generally speaking, all the rest of this movement up here is all fresh positions entering, fresh positions entering, fresh positions entering long, fresh positions entering long, because again, this would have knocked out all existing orders. So the only thing that can drive it up to here is going to be fresh orders, right? Fresh orders. So the market maker has an opportunity in this circumstance, right? First of all, they have an opportunity to pay themselves here, secure their position, which also is a buy, right? That's also a buy. So they have an opportunity here. They can pay themselves, secure their position. It can come retracing back to their original entry where A, they may have unfilled orders still, and B, they have an opportunity to add their profits from here back into here and compound the trade for a lower low. In the meantime, all of the fresh orders that entered long to drive it up to there, they can blow all of their liquidity as well. If they're greedy and they still had all their stop losses in here, they can blow all that liquidity and use it to their advantage, right? So that's kind of like the concept of like why it would even come back up in and mitigate a zone. And this is just, again, guys, don't, fully up for debate. You're just getting, I'm giving you an insight to just the way that I interpret this, the way that I look at this. No guru sat and meditated with me on a mountain and shared these concepts with me. I did not pick them up after reading 500 books. This is just what logically makes sense to me, right? It's just what logically makes sense to me. If anybody has any questions on that, please let me know, and we'll get those addressed. If not, I'm just going to keep moving on. And what's up, Alexo Crypto? All right. Okay. And now in this same example, right, you just simply invert the chart if we're going to talk about demand, right? We just invert this and we talk about demand. Same idea, right? Demand coming back in to mitigate for your higher low and higher high when demand is in control. So you take all those same, you just reverse all the terminology and you're looking at demand now. So this is a perfect example of how I want to see price present. If I can, there's always this last buy to sell in here. That's always going to be my pinpoint area. But again, I'm looking for my position between here and here. Where am I looking to take that to? I'm looking to take it to here. Now, in the event that it breaks that low, that's just fortunate, right? That is just fortunate. Okay, now, different types of supply and demand. You've got your order blocks. This to me is going to represent more of an order block style, and then you have like pivot areas and range based areas. In my current example here, my pivot area is from here to here. and my order block is in this area here. Now, a range-based area as opposed to a pivot-based area is very similar. It just presents a little bit differently. You actually formed a range here. You actually formed a range, right? Now, in this circumstance here, this is what I would refer to as range-based supply, as opposed to just purely pivot-based supply. Let me get that example back on here so we can look at that together. As opposed to just pivot-based supply. Do I care whether it's range-based or pivot-based? Does that make any difference in my life? No, it makes zero difference. Absolutely no difference at all to me. It is the effect of what occurred on the chart is no different in this example than it is in this example. Yeah, the effect is the same. I will talk about a slight difference between these two. But the effect is the same. Effectively, more supply entered the market here than demand, or price would not be down here. Effectively here, more supply entered the market than demand, or price would not be down here. The only difference between the two of these is, in my opinion, this zone probably is a little bit harder to clear. And the reason I say that is because it removed liquidity prior to breaking the low. And that is something I'm always going to pay attention to, right? That is something I'm always going to pay attention to, meaning these people entered short, it came back and it took them out. These people entered short, it came back and it took them out. And then it went down. This to me is always going to be more indicative of a larger position being built by a smart money or institutional investor, because they like to put their orders where your stop loss is, right? To add to the liquidity, to avoid the slippage, right? If they can get a lot of orders to stack, if they can get a lot of stop losses to stack here, then when they trigger those stop losses, that is, these are short orders, right? So when it comes back and triggers these stop losses, it's triggering buys. That's supposed to be a U and not a V. It's triggering buy orders. That's important because you have to have somebody buying what you are selling. If you don't have somebody buying what you're selling and you sell it anyway, the market will slip. And either A, not fill all of your position, or B, say they enter 30 million. Say they want to enter a $30 million short position right here. Well, if they just had entered it, I don't know, like here, hoping to have a $30 million short position filled at, I don't know, whatever. We're just on a random chart at this price, right? And they were hoping to have 30 million short at that price. Well, if there's not enough demand there, if there's not enough people buying what they are selling, then the market is going to slip on them. And then the market may be all the way down here before their entire position is filled, right? And so they now have an average entry price of this range here. They now have an average entry price of this, whereas they meant to have an entry price of that. So what helps them avoid that is by engineering a high or a low, right? In this example, this high is engineered. They got people to stack stop losses, and then they pulled those stop losses and moved them into their position. They stole their money, moved it into their position, and then brought it down. So in the event of a zone like this, really anything that has removed liquidity prior to breaking the low, This to me is always a little bit harder to overcome than an area like that. Okay, so we talked about range base, we talked about pivot base, we talked about a little bit of an order block. Let's talk about another couple basic rules. Basic rules, okay? 3 rules for me that now a bull flag makes more sense. Good. I'm glad it does make more sense. And I'm happy to talk about a bull flag and see if I can make it make even more sense for you. What was I going to say? I got sidetracked here. The rules. Okay, the rules. The rules go like this. Number 1, it needs to break structure. Okay, if it didn't break structure, you're not looking at supply, guys, or demand. If we invert the chart, right? If we invert this really quick, invert this, right? If it didn't break anything, and I'm referring to breaking this high here. If it didn't break anything, then you may be looking at demand, but it surely isn't effective demand, right? Or in this case, supply. So what do I mean by that? Like it only comes down like this low. We're going to pretend this is a candle here. It only comes down that low, and then you see it start pulling back up. Well, it didn't break this. There's no evidence to suggest yet that supply is greater than demand, right? Because people have gone long here. Long orders got filled here. If you only come down that low and you're already retracing back up, there's zero evidence that the supply has exceeded the demand, right? It's just not clear on the chart. So it needs to break structure from left to right, okay? It needs to break it. And it needs to form an inefficiency. It needs to form a fair value gap. It's required. That's not the template I need. It is required. Required. It has to break structure and it has to form a fair value gap. Without that, again, you may be looking at supply, but what I'm looking for is institutional supply. That's the entire principle of smart money concepts. I'm looking for where the smart money supply came in. And smart money supply is big. Okay, it is institutional investment. When smart money enters, they cause large moves in the market. Large moves create inefficiencies. They rip through all of these orders, all of these buy orders down here. They rip through them like a hot knife and you get no reaction out of them, right? It just blows all of these orders out of the book, cuts straight through them. That is what indicates you have an institutional position that has entered the market. So those are those 3 rules. You got to have the break of structure. You got to have the inefficiency, and then ideally what you want to see is you want to see that it is taken out like a greater market structure point, right? So let's do this. Boom, boom, boom. Something, no, I don't want this hump in there. Yeah, this looks better to me. This looks better to me, right? And then if you see that it is also taken out a larger external, refer to my market structure videos if you don't know what external and internal means. External structure point, right? If you see that it has not only broke structure from left to right, created an inefficiency, but also taken out a larger market structure point where these, here in this over here, what happened over here? Demand exceeded supply and came up significantly, right? And so if you can see that these orders not only blew through anything fresh in the books, but also overtook all this prior price action, you quite likely are looking at institutional involvement, right? And I want to play with those guys because they're here to take retail's money and make it their money. So I don't want to play against these people. I want to play with those people. All right, let's see here. Yes, this is for any time frame. This is for any time frame. As a matter of fact, that's a very valid question because I am drawing structure right now and we're not talking about time frames. So yes, I want you to, this is whatever structure you want it to be. This could be daily market structure. This could be 5-minute market structure. Doesn't matter. The principles are all the same because it's just a simple issue. Like we started the video, it's just a simple issue of like how much supply or demand hit the market, how much was below it. If there's 5 up here and there's only 4 down here, price is going to fall below those 4. Right? So it doesn't matter whether you're looking at the 1, the minute, the 5-minute, you should take it with the lower time frame you go, you got to take it with a grain of salt, right? You can't expect as, what's the word I'm looking for? You can't expect as consistent respect to these concepts on lower time frames as you can on higher time frames. So no, it doesn't matter. It doesn't matter what time frame you're looking at. And I've done a video on market structure on how to identify what a valid high and a valid low looks like. You probably want to refer to that video as well. Use it in conjunction with this information. Okay, use it in conjunction with this information. All right. Let's see here. Yeah, Alex, of course, man, it's my pleasure. No, don't worry about it, Luke. That's why we record these things. So even if we broke structure with a candle close, but without a fair value gap, you wouldn't be convinced to enter a trade. Okay. There needs to be like a fair value gap at least here. Right? So I don't necessarily need the fair value gap to also be down here. I prefer it to be. But I need to have I have to see an inefficiency somewhere, right? And we'll get into candles and make a lot of examples, but I have to see an inefficiency somewhere. Because if this just let's do this without an inefficiency. Let's delete this. Let's do this. Okay, we've broken the low. We've absolutely broken the low. The trend is down, right? The trend is currently down. Let's extend our trend here. Whatever, close enough. You get the point. The trend is down. It has broken the low. Okay, it has broken the low, but this does not look like strong supply to me. This does not look like institutional positions to me. This looks like weak supply. It is working. It has broken the low, but if price were to do this, and this goes back to the bull flag and bear flag thing that somebody mentioned earlier, if price was to do this, what is going to stop it? Because this break, I'm going to illustrate this a little bit more, mitigated the prior break. This break mitigated the prior break. This break mitigated the prior break, or the prior supply range, I'm sorry, mitigated the prior supply range, mitigated the prior supply range. And let's say, for the sake of this example, that this one also mitigated the prior supply range. So if it breaks here, what in the hell is going to stop it? I don't see nothing that's going to stop it. All of this stuff in here has already been pre-mitigated. So yeah, the low broke, but it already went back and filled the orders. It already went back and filled them all. Right? So again, for this low, for this high to break here, we already know one thing: more demand existed here than supply in the total market. More demand existed here than supply, or price would not be up here. Okay, So also, so in this circumstance here, like we have formed demand below us. So considering we have pre-mitigated and sort of erased all of the resistance off of the chart, to me, it would be more logical at this point to come back into here and start forming an uptrend to smoke this high. So in a circumstance like this, I would rather look for my short up here than anywhere in this zone. I would rather look for the short up here, as that is still going to hold up our entire trend, right? Lower high, lower low, equal high, lower low. So that is why I want that inefficiency on the chart. Here's another way to look at it. We're going to put the example back on with the inefficiency. So in this example here, in order to, remember our prior example, the one that I was just working on, looked a lot more like this. We did break the low, but then price did this. That creates a break in structure. Right? And that, yeah, I understand that break in structure may only be to come remove a little bit more liquidity and come back down. I get that, but, and I'm not saying it isn't shortable. I'm not saying that type of break of structure isn't shortable. I'm just saying in this case, you can't break structure bullishly until here. And really you should be paying attention to this high, right? You can't return bullish structure until you do something like that. Whereas in the other example, we have broken this low. We have broken that low, but if price does this, showing that there has been some manner of demand gaining control here, well, like it just looks like it can run all of this a lot easier, right? And things very locally, at least between here and here, have switched into a little bit more of a bullish trend. So this is just way less shortable to me than anything that presents like this. Okay. Yeah, that's the supply chain and run it. Yeah, Luke knows. He's been following my contents for yeah, he knows what I'm talking about. Okay, so let's go hop into some charts and let's look at supply and demand, right? Let's look for pivot demand. Let's look for range-based demand or supply. Let's look for those breaks of structures, creating those inefficiencies. Let's look for all that stuff. I'm just going to pull up the last chart that we were kind of playing around with, and I think it was me and Black and Blue. I think he's got a different YouTube name. We'll just go to the Fartcoin chart, right? We'll just go over to the Fartcoin chart. And we'll use some examples off of this. I deleted them, so it'll be great. I'll have to redraw them. All right. Let's see. Let me hop up to like the 4 hour real quick. And let's just see what we can see in here. I don't know. Well, we'll see if I want to get into like really small time frames, and we'll just see. We're just gonna play around here, all right? We're just gonna play around with this for a minute. All right, so in this example here, we can see that we have a range, right? We can see that we have a high, and we can see that we have a low. We can see that the low got swept down here, right? The low got swept down there. SFP placing weakness on this high, the high that created the low, right? The high that created the low. Now let's look for some supply and demand in this area. This here was just another SFP of another range. But in this section here, we'd really have to play with some time frames. I may skip forward here a bit, but we could let's take maybe this next one here. So there's a couple of pieces of information we have on the chart currently. Currently, we know that there is a range. Currently, we know that all of the supply from here to here could not exceed the demand from here to here. Because if it did exceed it, price would have broken that low. But it did not break that low. It just came for all the stop losses that were still hiding underneath there. Now, it then comes up and breaks its high, right? Comes up and breaks its high. Where's your inefficiency? From this candle wick to that candle wick. I'll zoom in so we can see this a little closer. There's your inefficiency right here from the top of this wick to at least the bottom of that wick. Honestly, this was all an inefficiency until these candles existed, but there was still an inefficiency right there. So we know a couple of things. Prices broke structure from left to right. There's also an inefficiency from here to here, right? So it has accomplished, rule number one has been accomplished. It has broke structure from left to right. Rule number two has been accomplished. It has formed a fair value gap. Now, the orders that caused this, I would actually argue, did not come in here. I would actually argue they come in here, but I don't want to play around with 15 different time frames. I'd like to use a lot of different charts, or I'd like to just keep moving. I don't want to zoom into every micro move, but I would actually argue that they came from here when they removed the liquidity from this low, SFP'd that, and then you have your big inefficiency to follow. That is the inefficiency that broke this, right? Okay, so we have broken structure from left to right. We have formed an inefficiency. So what does that give us here? What does that mean occurred on the chart in this area? It means that demand all throughout this zone has exceeded supply that brought us to the low. It's just a given. It's the proof is in the pudding. It's on there, right? So that means that we have formed a demand range here. Now, is there a perfect little order block inside of it? Maybe if we played with some different time frames, maybe there is. But again, I said I don't want to do that. We'll probably just keep to the 4-hour chart. So as price performs its range, it comes from this point to this point, puts a range in and breaks. That is your initiation, your mitigation for your continuation. Now I kind of feel like I do want to play with some different time frames here. So that is what happened here. Okay. We could go up. We got to play. We're gonna have to do it. We're gonna have to play with different time frames. And in all honesty, it's probably better to do that because, where were we? Oh, we were down here. Because you're not always going to be able to find it on a single time frame, right? So you're gonna have to learn how to look through different time frames. Let me do myself a favor so the chart does not keep hopping all over the place. Let me do a rewind. Let's do a rewind here. Yeah, just so that it's not hopping all over the place on me. Yeah, and now let's drop down to like the 5-minute. And let's see if we can find what caused this high, right? Let's see if we can find what caused this high. Okay, now this is where we're going to use the original drawings that I indicated, okay? So we can see that we broke structure from left to right here. Okay, where is our inefficiency on the chart? Our inefficiency on the chart is here. Fair value gap. Okay, now we see that we have broke structure here. Not that way, that way. Okay, and what else do we see? So we had an entire range of supply from here to here. Okay, did price initiate, mitigate, and continue lower? Yes, it did do that. Did do that. But in the example I'd drawn before, okay, price comes down, sets a low, comes up, sets a high, boom, boom, boom. This example here. This example right here. Where your inefficiency, let me get some of this stuff back on. Where your inefficiency existed here. Okay? That was the example we were working with at the beginning of the video. Where does that exist in this area on Fartcoin? This is your last buy to sell that broke structure from left to right that created an inefficiency on the chart. This is where that occurred. Buy to sell, breaks left to right, creates an inefficiency, takes price below a prior swing point. This is where the orders entered that caused this break of structure. They entered here. So that is where that high comes in, okay? That is where that high comes in. Now, how low did it go? How low did it go? Let's see if we can make some more examples. I like the idea of just using a random coin like Fartcoin. I'm liking this. I'm enjoying this because it just goes to show that like these concepts are universal. I don't care what you're working with. Be working with Forex, doesn't matter to me. Keep getting a little lost. Now, here we've got an order block. And I know it's white, so it's not the best example. It's a bullish candle. I get it. But we nonetheless see a sell to buy that breaks structure from left to right that forms an inefficiency on the chart. And that inefficiency here, to me, is when we actually broke this high. Here we SFP'd it, drew back. Where did we draw back into? The prior demand range, right? Because the demand that entered here exceeded the supply that entered here, breaking structure from left to right. So we SFP this high, we pull back into this demand range, and then we lift and we get all the way back up into that piece of supply and mitigate it, right? So you could include this entire zone, in my opinion, as demand. You could include this entire zone as demand. That's possible. You could do that. But where did the positions enter that caused this inefficiency? Where did they enter? I suspect they entered somewhere inside of, what are we on, the 30-minute chart? I suspect they entered somewhere inside of this 30-minute candle. I think that's where their orders were filled, and the filling of those orders is what created the inefficiency. What caused a move like this? My portfolio cannot do this, okay? If I threw my entire portfolio at Fartcoin, it is never going to print a candle like that, okay? It's just not going to do it. It's just not going to do it. So that tells me that somebody way bigger and way more important and way more wealthy than I am, they are the ones that got involved here. So let's continue to follow Fartcoin along, right? We're just going to continue to follow this along. Now we get down into demand. We form a range and we SFP it, right? We form a range and we SFP it because we pulled the low again. Now, again, we're going to see the evidence happen again. Okay, this is going to meet all of my rules again. Break a structure left to right. Inefficiency on the chart. I mean, that's not efficient. That's not efficient. That is clearly not efficient. And what did it also do? Took you up above a prior swing point, right? So that meets all three rules of mine. Does that mean that this range here represents demand? Yes, it does. So as you can see, when we interact with this spot, we come up again and crack that high. Now, do you see any significant demand entering the market in this area? I don't see anything super significant, guys. I don't. I see a little bit of an inefficiency in this area, but I see a pretty poor close above that. I'm sure if you go up to the, you pump that up one more time frame to the 45-minute, and it don't look so good there, right? So I don't see a lot of demand entering into the chart here. Not the same way that I was seeing demand entering the chart into these areas, these areas, these areas. I don't see that same kind of demand entering. I don't see that at all. Let's see here. What is this line? Make that line go away. Not the cleanest, okay? Not the cleanest. But we did break this low down here. We all see that, right? There was a buy to sell that broke structure from left to right here. Now, again, not the cleanest. Where's my inefficiency? My only inefficiency that I have is really these two candles right here. I don't have a ton of inefficiency out of this area. Let's play with a different time frame. Let's go to the 15 maybe. And remember where I was. I was in this zone here. Is that where I was? Where I kind of lost track of where we were. Yeah, we ended over here. You know what? Let's go with higher time frames, actually. Let's go with higher time frames. Remind myself where I am. Trying not to get lost here. Up further. Oh, I don't know if I'm gonna be able to make a clean example out of where this high came in. I'm not feeling it. It's just, yeah, it's kind of ugly. It's kind of ugly. On the 2 hour, I would say it displays the best in the sense that this white candle right here, it displays the best. It's not perfect though. This is probably something I would not normally mark on my chart. I can see here that you had a buy to sell, and on a lower time frame, because I'm on the 2 hour, you broke some structure down there. I can see that. My problem is if I use this candle and I highlight this candle, my problem is ever so slight. It is the tiniest of problems. So let me zoom in and show you my tiny little problem. This is my tiny little problem. It's a pretty small problem, right? I mean, it's not a big problem. It's a tiny problem, so I kept calling it tiny. That is my tiny little problem right there. But it's nonetheless, that's kind of shit I pay attention to. So this to me would not have been a super confident zone. It really would not have been a super confident zone for me. I think it generally lacks the inefficiency, it just generally lacks the inefficiency. But that's the closest I can get to that high. All right, then we come down, we SFP the low. We SFP the low. We're on the 2 hour time frame. I don't know if we get any mitigation on this one. Let's go back to the 15. Yeah, no, not really. Really don't. We don't get any mitigation here. Maybe that gets mitigated later. What happens down the line? Ooh, question mark. What happens here? What happens there? We'll have to press the play button on that one. But you did here. You did here for sure. You broke structure from left to right. Let's drop down to the 10. I hate how it always throws me all over the chart. Broke structure from left to right. Boom. Check. Inefficiency. Check. The very first break would have been here. Yep. Lower time frame still. We're on the 10, so this is probably down in the 5. So does this whole zone here represent demand for me? Yes, it does. Does this lower section here that caused the inefficiency that ended up breaking this high, does the zone that caused the inefficiency represent demand to me? Yes, it does. Yes, that does represent demand to me. God dang it. I'm just yapping. I invited you guys to come in and ask questions, and I am fucking running my mouth and not looking at chat. I mean, Black and Blue asked, does the size of the fair value gap matter? Yeah. I mean, it does. You know what I mean? Like, it does. Think about it this way, right? Like, the more supply that rips through any buy orders that were below it, the stronger the supply is and the bigger the fair value gap will likely be, right? So it matters. So the last high to low in a bullish scenario is a demand zone. Yeah. Let's draw some stuff here. Let's draw some stuff here. I'll make sure I got this right. I did. Yeah. So to me, all of these are demand zones. Every one of these is a demand zone, and again, it goes. It's simple in the respect that I know, objectively speaking, that more demand entered here than supply entered here. I can objectively determine that because if more demand, if there was not more demand that entered inside of this, then price would have never. Sorry, let me state this correctly. If there was not more demand that entered here than there was supply that entered here, if this was not greater, well then how in the hell could price be above it? It's impossible. It's impossible for price to be above it. Demand had to be greater than supply for price to be up here. So yeah, these are all, every one of these is a demand range. Every one of them. Every one of them. With the exception that we have one that's been mitigated and we have 3 that have not. We have 3 that have not. And then I look at this and I go, let's do this. We'll use it. We're going to use an example here. So this has not been mitigated, right? Would I look to long from a zone like this? Yes, I would. Now it depends on context, right? Let's ignore the candles for now. Right? Let's say that price did this and we are right here. Would I look to long from that? Well, probably not, guys, because let me be a little bit more clear in my thinking. Let's say price looks like this. Would I look to long from here? No, this is a trade that I would likely avoid. Even though this demand has not been mitigated and this is in an uptrend, I'm using this information over here because this to me is still a range. I'm just giving you examples of where I would use this and where I would not use this, right? This to me is a range. We are A, in the premium of the range. We have B, not cleared the range. Mainly it's just an issue of being in premium, right? It's just an issue of being in the premium of the range. So I don't want to long here. So I go, okay, all right. So hold on. Let's flip this template. Let's flip this template and let's put it onto this one. Okay, cool. So I prefer to long this in the discount of the range, right? Do I have an unmitigated demand zone in the discount of my range? Yeah, I do. Would I long it? Probably not. Why? Because in order to achieve a zone like that, I have to break structure bearishly, right? I have to break structure bearishly. Now, do I have unmitigated demand here? Yes, I do. Could that demand work? Yes, it could. But I'm still looking at the failure of a, come on, magnet tool. I'm still looking at the failure of a prior swing high and a break in structure. So if I see this demand pulling up and breaking some structure here, and I see evidence that it's starting to work, like that's cool, but I still have an unmitigated supply range right above me, right? I still have in this theoretical example here, I still have an unmitigated supply range in front of me, and I've already seen evidence that all of the demand that entered the market from here to here was not greater than the supply that entered the market from here to here. I've already seen that evidence there, and so I would much rather wait to see if it's going to fall out of that and eventually come down and take the low out. So there's like a lot of, again, like I'm just covering supply and demand today, not really so much market structure. I got a couple videos on market structure. So there's a lot of stuff that I use in confluence to supply and demand. Like here's the first thing I should have mentioned when I started the video. Supply and demand's cute, it's neat, but market structure is my primary thing that I'm looking at. I'm primarily looking at market structure. And if I see market structure interact with supply and demand, and that is supporting where my market structure is going, that's the only time I use it. I honestly could probably trade without ever drawing a supply or demand box, right? Because the market structure is going to tell me 70% of the information, right? But if I see a reversal in market structure in the middle of nowhere, I'm less confident. If I see a reversal in market structure in supply or in demand, then I'm more confident, right? Yes, what Luke said. All right, so let's delete all this hogwash, and let's continue to track Fartcoin, just as an example. And if anybody else wants to use a different coin and do that, that is fine by me. That is fine by me as well. Okay, so there's a cool thing here. This is where I'm gonna yeah, this is a cool thing. I like this. So in this circumstance right here, you have a high, you have a low, you have a high, you have a low, and you have your inefficiency, and this matches perfectly the drawing example that I have been using, right? This matches it perfectly. So is this demand? Yep, sure is. Sure is demand. Interesting. Did it come off of a lower piece? Yeah, no. See, I don't like where this low came in at all. So again, just because this is a good example to use. I like this example because this shows the importance of market structure over supply and demand. You have this meets all the rules, right? Break structure left to right, create an inefficiency on the chart, come up above a prior swing point, right? So it meets all three of the rules, but what happens when it gets there? Not a goddamn thing happened. Not a goddamn thing happened. As a matter of fact, this whole move from here to here is almost untradeable for me. Almost untradeable. Yeah. Yep. And that happens, right? So I would want to see, yeah, I would have to have evidence of some sort of change in structure coming out of a zone like that for me to want to entertain any manner of long. And then I'm going to have to understand that sitting right above where I'm looking to long is supply. Right, I'm going to have to understand that that is still right up there. So like it just that's a pretty untradeable move in my opinion. Not every single move is tradable as far as I'm concerned. um here's an evident here's an area I could have traded. um Gosh dang, we probably got to use the 5 for this. Where was it? Yeah, it's down in here. No, I lied. I couldn't use that either. Because this did not. So I wanted to pick on. I can see where demand worked, right? But I have to. I have specific rules I have to follow, and this does not meet them. Even though I can see that this area did indeed work, right? It did indeed work, but it lacks one of my rules. Or does it? Oh, see, I see it now. See, this is not, to me, this is not a break of structure. This is not a break of structure. And the reason for that is because this low here did not touch the prior low. Didn't do it. The actual break of structure is over here. This is the actual break of structure because this candle exists before this low. So when price comes back to here, that's actually where you break. So I could use it. I just can't use it from here. I have to use it from here, if that makes any sense. That would be an example of demand, where you have your break of structure from left to right. You have your inefficiency. You come up above a prior swing point. That to me represents an area of demand. Now, I couldn't have taken this trade out of here. I couldn't have taken this one because that is not a break of structure. That is not a break of structure. That is an internal break. Your break does not exist until here. And look at the difference, right? If you took that and you said, okay, that's my demand, you got left on the bus stop. Your order was down here, you got left on the bus stop. If you take your actual break-in structure and extend your demand range to there, well, then maybe you don't get left on the bus stop. All right. Let's see here. Blah 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 blah. No, when I'm looking for supply and demand, I'm using every time frame. I'm using all of them. I'm using all time frames. I look for supply and demand on every time frame. Nope, I don't have any specific time frame I'm using. No, matter of fact, you often have to fish through different time frames to find it. All right, let's hit the play button. Let's pause it. Let's talk about it. So far, we see evidence that we weren't able to clear this high, implying that there's weakness down here, but none of the structure that brought us from the low to the high has broken yet. Has not broken yet. So no trade for me. Okay, now, in this circumstance here, where do we come out of? Interesting. Oh, I can tell you where we came out of. Demand. This is where we were talking before. Demand created demand. You break structure from left to right. You have your inefficiency. So demand here has created additional demand. Pretty sure that's where that low got put into. Okay. Now you're in demand here. Let's back this guy off. And coming off of your low, you put in your first break here. It's fine. Let me go back up to like the 30. No, I needed the 15. Nope, 10. Maybe 5. No, it's about 10. It's about 10. So you get a 10-minute bullish break here. It's a little ugly. I mean, it's pretty ugly. Again, it lacks like real institutional investment. I don't see giant inefficiencies here. Did you create a break here? Yes. I mean, if you go down to like the 1 minute, maybe. No, I can't go to the 1 minute. Yeah, you did. Did it take you up to here? Yes, you did. Let's see here. Where do I like? Where would I put my remaining unmitigated? Because I see our inefficiency coming up out of here. So I can tell you I do like this zone. I do like a revisit of that zone, especially because we don't have to break any structure to get down there. I don't have any structure on this leg. So we don't even have to break any structure to get down there. What do we have up above us? Do we have anything up above us that could hold us back? Well, we know that we broke structure here. And we know that all of this represents some manner of supply. And we know that right in, come on, mouse, work with me. Now, I have no idea if this is going to work. We're just going to mark it, and we're going to monitor market structure, right? I can tell you that right in this zone, we had another break from left to right, and we did indeed have a manner of inefficiency that followed it. So let's see how price flows through here, right? Let's just take a look and see. I don't know. I wasn't trading Fartcoin back then. All right, so it ripped through there. Okay, so great. So here's a good example. Let's stop the playback. Let's talk about this. So there's supply up there. We know that supply existed in the market up here, or price could not have gone from these areas to this area. We know that supply was in excess of demand at the time it was being traded up here, or it could not achieve a zone like this. So as we come up into this zone right here, let's pick on this zone. Let's do this. And we see price pulling back into this prior demand range. And we know that it cannot break structure bearishly until it loses this low here. Come on, man. Okay, so whenever I see a scenario like this in which we have formed a low and we are moving on up and we are interacting with supply, I ask myself the simple question, is supply or demand in control? Which one's in control? If supply is in control, it would have broke this low. If supply was still in control, it would have broken the low. Point blank, end of story. Yeah, didn't do that, did it? Didn't do that, nor did it pull the low. Probably a mostly untradeable move for me. That one was probably mostly untradeable. All right, let me get back up to the 4 hour and figure out where the hell we're even at on this chart. Okay, all right, interesting. So let's delete all this stuff. We've talked about all that stuff. Let's delete all this. And now we're getting into an area of the chart which we were kind of talking about to begin with, which that is we had a range of price from here to here. We had failed the low, implying weakness on this area and this area. And we kind of followed it up through there, right? Now we're hitting get back on there. Now we have something that looks a lot more like, use your imagination with me. We come from that high, set our swing low, we come up, we come down. Are we going to break this? And is this going to match what our original drawing that we started with? Is it going to match it, right? Oh, well, fuck, I have no idea. All right, what in the world happened here? Let's hit a pause button. Oh no, let's go ahead and play it through. Okay. All right, I'm going to need to let's drop to the 30. I feel like we're going to need to be a little bit lower on time frame here. So we can see that we have initiated up out of this prior sort of larger range. Is RIMC always picture perfect and exactly the way I want it to be? No, it's not. But did we initiate? Did we mitigate? Did we continue? Yes. Okay. So is RIMC working? So far, so good. Did we, let's get this back here. No, I'm just going to use the blue boxes. Did we form in a range here? Did we initiate? Did we break structure? Did we have an inefficiency? Yes, we did. Form another range here. Did we break some structure around these places? Yeah, we sure did. Did we form some manner of an inefficiency? Yes, we sure did. Did it come back and mitigate it? Yep, sure did. Did it then come up and crack this high? Yeah. Did we initiate? Yes. Did we mitigate? Yes. Did it come back up and crack that high? Yes. Did we initiate? Yes. Did we mitigate? Yes. Did we continue? Yes. Though only after an SFP of the low. Only after an SFP of the low. And then it came back for this low. That's interesting. So yeah, that's now did we come back and actually get the high though? No, we didn't. Okay, so we kind of start ranging here. Now, why did it fall through this? I mean, we see it broke structure here, but why didn't it gain support in here and come back for the high? Because these have all been mitigated. And that goes back to that bear flag, bull flag thing, right? Bull flag, mitigation, mitigation, mitigation. So when it starts flipping structure, there's nothing holding it back still. Same thing that happened in this area. So it cut all the way down. It's kind of a surprising place for the low to come in. Or is it, right? Because we have a demand range down here. So is it really a super surprising place for the low to come in? I mean, not super surprising. Would I have been able to take advantage of this move right here? Probably not. No, I probably wouldn't have been able to take advantage of that if I'm going to be totally honest. All right, now we know we're coming back up into our topping range right here. So let's see what happens. Let's see what happens. So far, we only kind of know two things in this point. We know that we broke structure here. And we know that this prior demand range pivot zone has been mitigated. Where the fuck's my button, right? That's all we know. That's all I know so far. And all I know so far is I don't have a candle close above that. I have no idea what's going to happen yet, okay? I got to hit the play button to find out. This is just all I know. All I know is that we have initiated from this sort of original range that we are investigating. We have initiated from it. Come on, you stupid mouse. We have mitigated it. We have broken structure. We have created new demand. We have mitigated that demand, and we are coming back for that high. That's all I know so far, okay? Now, let's hit play. Aha! Well, what do we have here? We have price entering a prior topping, aka where supply exceeded demand and brought price down. We have it re-entering there. We see failure to clear above the highs. We break structure from left to right here. What did we just create? I reckon we created more supply in this area. Right? And this would be the last buy to sell that broke structure from left to right that placed your inefficiency on the chart. I have no idea what's going to happen when price gets there, but I know that we have created supply out of supply. We have broke structure. And when by the way, it's hard to say all this stuff and keep up with the replay it's just hard. It's hard to keep up. When you're breaking this low here after failing these highs here out of supply, what do you think that is going to happen? I think you're going to run this low because where the hell is where's your institutional position in here? Where's your inefficiency? Where's your local structure break from left to right? I guess it's there. Right? And did you get lift out of that zone? Yeah, you did. Right? You did get lift out of the zone. But you can't break structure bullishly until up here. Right? So the moment that this low breaks, strong high, right? You create a strong high up there, placing weakness on your low. Anyways, I get ahead of myself. So let's see what happens. I don't know. I have no fucking idea what's going to happen to this thing. But let's get some more candles to work with. Let's pause it there. All right, so a couple of things happened. We can look in hindsight and we can know that a couple of things happened. Let's get some of this stuff out of our way. We know that we had a range of price from here to here. And we failed to break the low with any manner of significance. Instead, what we did is we flipped structure directly after running the low. Can I back this thing up? Whatever, you guys get the point. We flipped structure directly after running the low, creating demand. We initiated, we mitigated, we continued. We came all the way up into supply. We got retracement from supply, did it break your primary structure that brought you up from the deviation of this range low here? Not really. I don't think it did. Let's double check. Let's double check. We're on the 30-minute time frame. Let's maybe drop to the 15 and take a look. So it did break 15-minute structure here. I'll tell you that. And I can tell you that after it broke 15-minute structure there, I would say it's pretty clear that it's coming for that low. But it didn't really break this low with confidence. Not to me, it didn't. Now, did that create additional supply up here? Yes, it did. Was supplier demand and control in that area? Well, your market structure is always going to have the answer for that. And I would say that clearly demand had control there. And so you have a whole bunch of little demand ranges in here that mitigated each other. Break structure. Inefficiency. All right. Okay, so I feel like I'm sort of understanding supply and demand, but I don't know what time frame to use. I would prefer 24-hour time frame or daily for it. I would prefer a 24-hour time frame for a daily scalp. Strong highs and strong lows are simple. Say this is all the price action you have on your chart. Okay. In my market structure video, you'll see me illustrate this. Hold on, let me just start over. Price comes up, comes down, comes up. Okay. At this point in time, you just formed a strong low. We're just going to say this is all of the information we have. We are not going to try and use this in conjunction with a whole bunch of other market structure over there. It's a brand new asset. It just hit the market today. This is what the chart looks like. This is a strong low. Okay, that is a strong low due to the break in structure. All right, so that low is strong. This is a weak high. I don't know where it's going to stop yet, but it's weak. It's weak until it takes out the strong low. So in the event that we see price pulling back here, again, that is a weak high. Weak high. Where do we want it to pull back to? We want it to pull back into demand. That's where we want it to pull back into so that it can come up and run the weak high. Okay, now my strong low at this point moves to here. My weak high at this point moves to here. Now we see price pulling back. Where do we want it to pull back to? We want it to pull back into demand. Strong low below you, weak high above you. Comes up, takes out the weak high. Sweet, my strong low has moved again. It keeps on trucking up. My weak high has moved again. And then price does this. Okay, now that reverses everything. We have now broken the structure of this uptrend. We have broken it, okay? So that, go forward again. That now changes everything. This is now my, let's delete. This is now my, we were missing a piece. It did this. This is now my strong high. This is now my week low. We see it starting to retrace. Where do we want it to retrace into? We want it to retrace into supply. Retraces into here, comes down, breaks this low. This is now my strong high. This is now my weak low. Price starts to retrace back up. Where do we want it to retrace into? Supply. Comes down, cracks your weak low. This is now the strong high. This is now the weak low. Now price comes back up to here and cracks your strong high. Let's delete some stuff. Okay, now at this point in time in the chart, what is the probability? Is the probability that you're going to get hit this first or hit this first? I think we know the answer. Yeah, let me pull up your picture. Where did you hit me on like my my chat channel? All right, let's see what we got here. I was thinking this pullback is not real because there was no candle close above the most bearish candle. Oh, yeah. Okay, and that's kind of present day fart coin. Okay. To support the idea this might see me breakage. Okay, let's go back to more current let's go back to more current Fartcoin stuff, and let's just go ahead and delete all drawings on this. And let's go to present day Fartcoin. So his question is, or his statement rather, I believe was that we got to go, hold on, I'm going to use the replay tool again. We're going to get back to here and we're going to talk about this one first. Let's go down to can I get to the 2? So I think if I'm understanding you correctly, you're going like, hey, this doesn't count as mitigation. This does not count as mitigation of this supply here. And I would agree with you because at this point in time in the chart, we have like this low, right? We have that low. We have interacted with that low, aka, we have filled long positions down here, and we have come up from the low. But this low is still intact. It is not broken. There is no break of structure until this occurs. And since this has happened, if memory serves me correctly, we'll have to check. I'm not sure if this has been mitigated or if this has been mitigated or if this has been mitigated. I don't know. I don't recall the answers to any of those, so we will have to find out. But yes, I would say this move here did not count as any manner of initiation, mitigation, continuation. No, there was no initiation here. The initiation happened after this. So in all reality, these are the positions that broke this low. Not these positions. They brought it to the low. These positions broke the low. Now let's go back to like the 30 and hit the play button. Ah, yes, now I recall. So you kind of see how that that pans out there, where it's like, you know, that statement of like, these weren't the positions that broke the low, those were the positions that brought you to the low. Then you pulled back up, filled more shorts. They are the ones that broke the low, which is what ended up defending, right? That was your initiation, mitigation, continuation. This is your mitigation. This is your continuation. Now, the other thing you said was in regards to this break of structure here. And I apologize. I'm gonna put you guys on a brief hold. I have to use the restroom. Okay, I have returned. I have returned. I'm gonna remind myself here. Yeah. Okay, let's go up to some higher time frames. And I have to try and remind myself here. Okay, so when we start looking at the daily time frame, so yeah, hold on, let's go back down. Let's go back down to the 5, and let's look at this, because essentially we're at this point in the chart, and I believe your next question is you're like, well, okay, so we had to break a structure here, right? We broke structure bearishly again there. So shouldn't we have anticipated a lower high for a lower low, right? Shouldn't we have anticipated that? Why did we come all the way back up here? And then it's like, okay, so if you fail this, then why haven't we seen our lower low yet? Where the hell's our lower low? What we lost it. Where the fuck is the lower low, right? I think the answer to that question exists on the daily chart. Yeah, I think it exists on the daily chart. So we know a couple of things, right? We know that we came up here and we broke bearishly on the daily time frame up here. I'm not going to dig over there. Let's follow the structure up from here. All right, so our structure kind of flows like this. Okay, so let's, now that we know, all right, and we know that we have break numero uno coming in here, but all of a sudden we have to start questioning, is it forming a larger range, or are we going to lose this low? Which would, in order for us to set, we were talking about where the hell is our, if we have a lower low, lower high, lower low, lower high, lower low, like where lower low, where WLL, where to WLL at? Well, we still have we still have the potential just in general of there having been a lot of orders sitting underneath here that had that the market maker wanted to run for a rotation back up to the high. That I think is still a possibility. Yes, I understand that that's a daily break in market structure right there. So maybe not the more likely possibility, but it's still a possibility. And, you know, I mean, like this is, it's like if you look at this all by itself over here, you go lower, high, lower, low. Where the hell is it at? But when you get out to the daily chart, you go, this is a really significant area on the chart. This is a very significant swing point on the chart. And I would venture to guess that, you know, I see that we had demand over here, right? And I see that we have mitigated some of it in the sense of this wick and this wick, but is there something else that exists down inside of this zone? I don't know. Let's go find out. Let's get this blue box out of the way. My monitor settings are messing with my eyes in here. All right, so let's see here. I don't know. I mean, that's a touch to me, though I will say this liquidity curve right here was a problem. Again, you see how it has not removed any liquidity prior to breaking the high. It didn't do that. No, it curled the lows up. So that was kind of a problematic area. And then we have this general area right here. Let's hit the play button again. Okay, that got mitigated. What happened here? What happened here? I think that got mitigated too. Yeah, that got mitigated here, right? Let's go to the 6 hours so it plays faster. Got mitigated there. No, I don't know. I don't know. I can tell from our pre-existing drawings that like all this stuff to me was already mitigated. It was already mitigated, which makes me think that this, well, I mean, it's a weak low, and and it won't let me type on it for whatever reason. Can we add text? Weak. You have to like click the plus button. Yeah, I think the only demand that was left in this range had been mitigated. Even this guy qualified for some mitigation. And so, yeah, I would say that that low is pretty weak. But let me go back because I got myself distracted. Let me go back to your chart to support the idea. This might seem as a break, but in reality, it's just a straight yellow path instead of the red path. And you get 9355 marked, just straight. Yeah, I think I'm picking up what you're putting down. You're essentially reading higher time frame. On the lower time frame, there is a break of structure here. But if you go to like the 12 hour, you don't see that. The 12 hour is where what color were you using? Is where your yellow path comes in. The 12 hour is more of your yellow path here. But the lower time frames, it was still kind of valid. All right, and then where do we remind me? What do we do to this thing in here? Because we were trading this thing. Yeah. So this is how I had established the zone. Because we were originally I don't know, shorting over here or something on Friday, something like that. I think that's where we were shorting on Friday, pretty sure. In and about this idea. Yeah, I think we picked up I don't know. Oh, here. Yeah, that's right. That's right. It was here. This is where we were going for it, right? Which is funny. We were part of the people that like kind of created an order block. Anyways, so that's why I was saying on Friday, I'm like, hey, be cautious of this zone of price right here. Actually, I think I had it all the way down to this 15-minute candle, or was I on the 5? I don't recall exactly. It's not, I don't have to be that picky about it. We'll just use that 15-minute candle. That's why I was saying, hey, you got to be careful about this zone right here, because that zone, if you follow your structure, we were coming down, boom, boom. We'll just, even if you go from there, that broke structure. It broke a prior swing point. It was locally a sell to buy that broke structure from left to right that created an inefficiency. And so I was like, hey, let's, I mean, this has got to be a TP for this short. I know we want this, but we got to be TPing in this area and we got to be careful there. And then sure enough, as we interacted with that zone, where was the high? Was it on the 5-minute? Yeah, as I first saw us hit this zone, right? As we first interact with this zone, I go, hey, be careful here on the short, right? Be careful here. You get the point. Whatever. I'm not going to edit it. And then eventually we do see price break bullishly out of that zone, right? Mitigating supply, starting to break some structure, forming new demand, breaking structure again. If you look at this even more locally, let's get this out of the way. We already know where that box was established from. Let's look at this range a little closer, because there's stuff that happened inside of the range too that's actually kind of interesting, I think. So you have some manner of a break here, some manner of inefficiency being formed, some manner of demand in this area. It ended up being all the way down in here was where those final orders got filled. A little hard to read on this time frame. But you know, you also have a little bit of evidence of accumulation. 1, 2, 3. You come back up, crack that high, creating new demand. That demand breaks structure locally here, creating some manner of new demand. And then we slam up from here, right? And so I'm going like, okay, well, we have not come back and mitigated this demand yet. We have not come back and mitigated this demand. So as we start getting back up into this topping range, into our area of supply, and we start seeing structure failing up in here, I'm going, okay, logical short, but we still have to watch out for this zone, because this zone meets all the rules for demand. And sure enough, that zone provided the higher high. I'm gonna get a refill on water, and then we're gonna see what everybody else wants to talk about, and then I think I'm gonna and then I think we're gonna like say we did a supply and demand video. And we used fart coin for it. Hilarious. Hilarious. We were even able to take a coin named after flatulence and use it. That's funny. That's funny. All right, I'm just waiting to see if you guys have any more like questions, or I don't know, anything you want me to take a look at. I got a wee bit of time left. What the hell happened to this fucking exchange? Why are you so bad? Oh, I hate this interface. I hate it. I hate it with a passion of 1,000 burning suns. I hate it. I hate it. I hate it. Yeah, it is surprisingly not so messy price action. Agreed. Agreed. We could take some of these same concepts, put them onto a different coin if you guys want. I could shut up and go on with the rest of my day. That's fine. I could do that too. I don't even know how long I've been streaming for. I don't even know how to find out. Wait, does it say on YouTube? No. Fuck, I don't know. I don't even know how long I've been at it. It does, most things do though. Most things do. Anybody want to give me a coin that they feel like doesn't follow structure and supply and demand? One that they feel like is just an ass wipe? Plan on fart coin. Let's take a look. I'd never traded it before. I just kind of wanted to trade it for funsies. Let's just remove all the drawings again. Let's just get those out of there. Let's put our most relevant information back on the chart. That's a daily break of structure. Bear boss. This is our weak low. This is our WH. The primary structure from the high to the low does not break bullishly until this point. So don't talk to me about 16 or 1648 until we have broken this zone and created some manner of demand below us. I can't talk about this level on the chart until this has occurred. Just can't talk about it. Okay, so we've got our most primary information out of the way. We still have this range of price between here and here that has not broken bullishly. We still have that supply, which I believe is where you derived your original short idea from, sitting on top of it. We have liquidity building below us that has not been taken out. So I would say for me, if this low had pulled the other low, maybe not that deep, but had removed the liquidity from that low, I would say that makes a higher probability that we are going to break this high. And that if we saw an inefficiency coming, if this had been pulled and then we saw an inefficiency coming out of this range into supply, I would still be happy to look for a mitigation of demand prior to a run up to see what would happen at that high. But that didn't happen, did it? No, instead we have liquidity here, we have liquidity here, we have liquidity here, we have unmitigated supply here. I do feel as though the most logical thing to happen at this point is this. I fucking know there's some candle down in here. I know, I just know it. I just can't be bothered to find the time frame. So I still think that that is the more logical scenario, right? Yeah, I just, you have the potential of stop loss, stop loss, stop loss. That was good, which is why you had such a bullish result. But stop loss, stop loss, stop loss, stop loss, stop loss, stop loss, stop loss. There's still a lot of liquidity points sitting below us. This has been addressed. There's not a lot of this has been addressed. This has been addressed. There's not a lot of remaining liquidity above us to run. So if we lose like 15-minute structure out of here, yeah, I mean, price could come all the way back down to there as far as I can tell. This does not present as a really strong bottom that would lead to, let's get back out to the daily, that would lead to a higher high. So far, I do not see the presentation of that. I absolutely do not see the presentation of that. Let me get rid of all these highlighters. To get back to that daily time frame, I think is where I was. Was I on the daily? Yeah. Dude, highlighter, you're killing me, man. You're killing me. Okay, what do I see here? I see this, loud and proud, can't miss it. You got to be blind to not see that. I see the potential of another break. If we drop to the 12, I would say, no, still, whatever. Hey, it's still post daily bear break, lower high, lower low. That's weak low. I still see that. I see a lot more wicks on the top side of these candles than I do on the bottom side of these candles, indicating to me that more people are filling up shorts in this area than there were people filling up longs in these areas. So yeah, I still, I think the 4 hours, what we were working with, I still feel that. I still feel like that's the case. I do. And furthermore, I would say that that kind of doesn't look terribly different than Bitcoin, right? I don't think that looks terribly different than Bitcoin doing something like this. Well, with the exception that that would not be bullish for Bitcoin. That would not be bullish for Bitcoin. Yeah. It's a nice V-shaped bottom though. I think this is going to determine whether this works. I think if this works, then this will work. I think if this fails and runs the all-time high, then we're going to test the top of this daily range here at 1290. I think if Bitcoin breaks the all-time high, then I think we may ultimately see a run back up there. But I don't anticipate Bitcoin to break the all-time high. So yeah, we can take a peek at Sui. We can take a peek at Sui. No problem. Let's remove all. You fucking highlighter. Let's remove all this stuff. So there's a couple of things on the chart that we have not mitigated this. I don't believe so. No. That whole area is unmitigated, albeit this section of it right here is a fair value gap. Let me amend this. I would like to amend this to here. I think there's something worth being concerned about there in the manner of a break. But this pending break here, I think could be significant. I think I liked it better on the 12. I don't think this low got put in someplace logical. I know there's some demand in here because I can see that there was selling, right? These topside wicks. I don't have to drop to a lower time frame to know that there was selling and then there was buying. And during that selling and buying, without even leaving the 12-hour time frame, I know that it broke structure from left to right here. And I know that there's an inefficiency on the chart right here. Those are things I know, but I think that has already been mitigated. Yep, and then that formed more demand here, and that demand got plowed through. Oh no, I take it back. It worked temporarily, and then it got plowed through. Okay, so any remaining long orders from this zone were likely filled. Any remaining long orders from this zone were likely liquidated. Let's see. Yeah, I still think that's kind of troublesome, but I think we're coming here. I don't think we are going to revisit these lows until this high has been touched. I don't think that's the case. Let's get down to some smaller time frame stuff and see if there's any wisdom in that. Okay, so to me, yeah, we're currently, no, I just don't see any resistance, right? I just don't see any resistance. I see that first break there had been mitigated to me. I see that this next break here had been mitigated as far as I'm concerned. I see that this break here had been mitigated as far as I'm concerned. I see that this break here had been mitigated. Yeah, that all looks expired to me. Yeah, that all looks very much expired. So for me, I see no logical reason to have broke that bullishly. I can't include anything down in here because there's not there's just not a bullish breakdown in there. No, there's just not. Those lows don't touch. This does not count as a proper bullish break to me. I can still see that it broke internally up, mitigated, and continued. But to me, this is the break of the trend from here to here. That's the break of that trend. And because that has broken, then whatever supply entered the market from here to here has been overtaken by the demand that entered the market in these areas. It has overtaken all of that supply. So I don't see any reason why it's not going to run this high. And because it with so this is the only this is the only resistance left to me prior to running this. There's no more resistance over here. And does it make sense for it to, yeah, so outside of an SFP on this, I think you're coming here. And I think, yeah, I think RIMC has been just, you know, kind of cruising along today. Right, mitigation. 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 So far, no initiation. Boom, 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 boom. And so, yeah, if you can't break this low, like now, then you have absolutely no hope of going down. And if you break this high, well, then you can mitigate, continue, mitigate, continue, mitigate, continue, all the way until you get up to this high, right? We did talk about this, didn't we? Talk about this. Why did that get removed? Yeah. And then yeah, if you break that high, then I don't see, even if we dip back down to mitigate this in this now larger demand range, I still think it comes up into areas like this before it revisits this. I still think it's here before here. Definitely here before here. And for my general rule of thumb, there's not a goddamn thing I can do about that because price has achieved premium. Down here, like maybe, but up here, for what I know, like the job of this low is to take out the high that created it. I think it is going to take it out. I just don't know if it's going to break it. And that's why I can't enter long here. Furthermore, you could see an initiation only to come back down towards entry for mitigation prior to continuation. So this is just not an area that I'm interested in. But I do suspect, see, what would make more sense for me would to see an initiation here, follow the structure from this high to this low on what is your potential mitigation prior to your continuation. This is a more interesting area on the chart for me than this will ever be, or this. Neither of these places are interesting to me. This is interesting to me for this. And then I start to get more interest up in there. V-shaped recovery happened without mitigation. What do I think happened there? Let's see. Let's see. See that this low had taken that low. See that we'd come up and we'd broken this high. So this is a demand range here. I like the last sell to buy because this is the, to me, this is failure on the range high. This is where the positions filled that actually broke the high and created these inefficiencies up here. And then there's this general zone here. So let's get all these boxes moved over and see if we can make sense of where the low got put in. I will accept this area because of this. Outside of that, I would, typically when an area just looks like this, like high, low, curve, I don't like to accept it. That makes me feel better about it. Where were we? I swear to God, I thought we were playing with this right here. I legit thought we were playing with this. Okay, so we have to redo that. We have to redo that. So this low, I'm taking this low. All right, so the people that entered inside of this range of price, where's my fucking arrow? The people that entered inside of this range of price ultimately created a 22% move on it. Again, my portfolio simply can't do that. But institutional investment portfolios can do that. That's not the fucking low though, is it? God damn it, bro. I keep getting way the hell ahead of myself. Keep getting way the hell ahead of myself. I need to zoom out. Because that is simply what caused this. But this is fucking weird, isn't it? Goddamn weird. Why? Why would there be orders down there? Why would there be orders down there? I mean, like, did it just want the stop losses there? That's so weird. So weird. I don't know. You know what I mean? Like, you make a goddamn good point. Why? Why is the low here? Why is the low there? Why can't the low be down here or down here? I'd feel better about it. I would feel better about it. But I mean, like, essentially, I don't, it's just like structure wise, I still just think it's. Let me go back to your question. What happened with it? What do I think? What do I think happened there? What do I think happened there? I don't know. I'm gonna say I don't know what happened there, and I'm gonna say it's okay to not know once in a while. I'll tell you what I think happened there. Here's the best answer I have for you. This is the best answer I will be able to get to you. I think that a lot of longing happened on Bitcoin between here and here. I think that a lot of people went long on the asset there. And I think when it hit the all-time high, they moved their stop losses to here. And because of that overall bullish result on Bitcoin, I think it caused Sui to put a low into a totally unsensical place. I think that Bitcoin caused that reaction. BRB again. Getting that post run headache, where you run a bunch and then you get a headache. Black and Blue, appreciate you. Thanks for the kind words. I'm not going to call you delusional because you think that there's oil money involved. I'm not going to call you delusional at all. I just, from a technical chart perspective, this is the only explanation I can give you for that low. Yeah, that's the only explanation I can give you. And because sometimes people will use their, like exchanges will allow you to use your gains on one asset as margin on another. This could have been a planned move all along, and then they were using some of these positions to power Sui. I still think that's why you see the market move. You know, the Bitcoin does something, and then like 40 other coins do the exact same thing. And I think that's because they use the profit from Bitcoin as margin on other assets as well. That's why I think they all move in conjunction with each other. And you know, the one good thing I will say now that we're here, because I haven't talked about this chart in a while, this is the only thing that makes me actually bullish about breaking this. If we would have come back up and touched that one more time without having interacted with this, I'd be swing shorting this thing to like here, which still may very well be totally possible. This just complicates things further. Now I need it to come here, and then back test into there, and then I can swing short it to there. I need it to break this range now. But those are all problems for another day. All right. Okay. I don't think I got too many more questions coming in. So I'm going to call today a successful shooting of the supply and demand video. Anybody who happened to make it this far into the video, if you're watching this in the future and you have remaining questions and I have managed to confuse the absolute shit out of you and you are totally lost, please hit me up in Discord and let's work through it. So yeah, I think I am going to go spend the rest of the day with my family, guys. That's what I think I'm going to do. I think I'm going to go spend the rest of the day with my fam. Yeah. And, you know, I appreciate that you say all the love and respect to you for what you do for your community. It is not my community. But I like where I like kind words. This is our community, right? It's our community. It is not mine. It is yours and mine and Luke's and Alex's and Ando Pancho's, and you know what I mean? This is how proper communities are supposed to operate, right? People communicate with each other, they respect each other, they try and help each other, they support each other. That is like the definition of a community. All right. Yeah. Yeah, I don't. Yeah, I could do this all effing day, but I really shouldn't. But I really shouldn't. I'm gonna kiss you, Total 3. I'm gonna kiss you if you break this. I kiss you in the face so hard. All right, I'm out of here, guys. See, Total 3. Supply and demand even works on charts that aren't even assets. Just saying. It's just a market function. Do you think Dodge to the moon or not anytime soon? We'll take a peek at Dodge. Doge, dog coin, doggy dog coin, doggy dogs. To the moon or no? Do we goeth to the mooneth or no? I mean, I can tell you what going to the moon looks like. I should be able to knock that out pretty quick. Let's just keep things really basic on a flow charting perspective. If you can break this high, right? We've come back down into our prior demand range. Okay. We have hit like the section that created this inefficiency. We are getting lift off of it. So I would say first thing we need to do is we need to overcome, let's just say this bottom section here. So really I'm just marking the front portion of it. It has nothing to do with that back stuff. I think if you can surpass this zone, you're coming to this high. I think if you can break that high, you're definitely going to fill this gap here, and you are going to interact with supply. This is the last section on the chart that caused the break in structure, is from 22787 to 21672, right? So flowchart goes like this. Let me use arrows instead of a bunch of kidney bean shaped highlighters. Arrows. If you can break this zone, then I think you are going to go to this high. If you can break this high, then I think you're going to go to this supply. At this point in time in the chart, this is a logical area for it to maybe come back and mitigate this prior demand range. But either way, that's not really relevant to the flow. I guess it's kind of relevant to the flow chart. I think that's a good time to come back and mitigate that demand range. And honestly, I'd like to see this thing come up like pretty far into it, and then maybe do a retracement into the prior demand range. At that point in time, what you're looking for is you're looking for price to come back and break this high. And if you can break this high, what you have showed is that demand or supply is not in control, demand is in control. And so I think at that point in time, you're going to come to this high. Now, if you can break that high, if we can break that high, I think we're going to be able to travel all the way up to this supply range here. So if we can break this high, I think we get up into this fair value gap, maybe perform some manner of range initiation, mitigation prior to continuation up to this supply. Oh, I have a crooked arrow and it has to be fixed. After that point in time, you have a high, you have a low, you have supply. So would it be logical to retrace from supply and remitigate the prior demand range? Yes. Has this supply at that point in time already been cooked? Yes, it has. If this demand remains in control, then I think you can make it pretty far up on the chart. Then I think you're going to have an opportunity to run targets like this and this. Hopefully that makes sense. Hopefully that makes sense. I like that. I like that flow chart. Let's go out to the weekly and let's ask ourselves, you know, yeah, like what is weekly structure telling us? What is monthly structure telling us? Where did this low come into? It came in after a gigantic break of like weekly market structure, and it came back down in and mitigated your prior demand range. Even down into the last section of your demand range, in which caused that inefficiency, right? So I think the low is in a logical place, and I think that it can continue to go up from here, yes. And that is more or less how I would see that flowing. Obviously, missing a whole lot of fucking candles, right? Like we're casting spells and doing magic tricks over here. But generally speaking, that flow makes sense to me. Guys, this was a riot. I had a ton of fun doing this. Thoroughly enjoyed it. Thank you guys for your time. We'll talk again soon. Get some grass touched. Go tell somebody you love them. Do something nice for somebody. Let's win the game of life. Let's win this thing. All right. Take care. You guys have a good one. I'm gonna end it before I fucking talk for another 3